Welcome to the Rick Helps Real Estate Show, trying to make sense of this crazy Arizona market. I'm going to show you some numbers. There's always a little devil in the details. So I'm going to show you some numbers that stick out, make you go, But then you have to go look at some other numbers in relationship to that graph that you just saw or that headline that you just saw. Because sometimes it's like I used to say, a large percentage of a small number is still a small number. Back in 2021, when our inventory was below 5,000 and then it went up, headline said inventory jumped by 37%. What, 100 homes? So a large percentage of a small number, still a small number. What we're seeing here today is what I think is kind of normal, and this is the list price versus sales price, but there is some interesting stuff in the details that I want to share. Now, this is showing that the average list price at the time the contract was accepted, I'm going to touch on that too. Barrett, stay with me on this one, was $306 a square foot, and the moving average for the contract was $299, the actual sales price. Now, this includes the high end areas, Paradise Valley, Fountain Hills, areas of Scottsdale. So I'm just not going to remove them for this video, but let's just do some math here. So let's say it's an 1,800 square foot house. That's going to put it at $551,000. That's what the price was at the time the contract was written. Here's what we don't know. We don't know where they started. Maybe they started at 575, rolled it down 5,000, down 5, down 10, finally accepted a contract when they had it at 551, and they accepted a contract at 538, 13,000 below their asking price. That's what this chart means right here. The thing that it doesn't show you that goes on in the background is the other additional price reductions because of this. Percent of closings with seller paid concessions, 53%, on average $10,000. So they may have been asking $551,000 for this home. You offered them $13,000 less, but you asked for about $10,000 in closing cost concessions. So they're getting about $23,000 less than what they're asking for. And again, we don't know what they originally asked for. It's kind of hard to tell. It doesn't, I mean, you could go in and look up a particular listing, look at the history tab and see started here, went there, finally got a buyer. So you can kind of drill around and do that. And I like to go look at price changes. The number of price changes per week this last week went up 2981 from the week before at 2618. So 300 more homes lowered their price. Why? Well, they want to sell before the holidays. So they're coming into the fall. Their house has been on the market. They're like, if we're going to move this puppy, we better lower the price. And we're starting to see that. So we'll watch it every week and see if it continues to climb or if it kind of stays where it is right now going into the holidays. This is the average list price per square foot. I took out anything over $1 million just to kind of compare it to our what I want to say, average price market. Chart wise, it looks like they really came down, but you look at it was $257 a square foot. Now it's $251, $6. Big deal. Lower than last year by $5, lower than 2 years ago by $9. So not a huge jump, but it is a sign here that sellers knew they needed to do something in order to get their house sold. And we look at the gauges here, which is a supply index, market, and demand index. It's all about supply and demand. I don't care what the math is. Here is a supply index of Tempe is pretty healthy. In red, it means that there's a lot of supply. And market index, their demand index is 71. But you take a look at some cities, you're really getting hammered. You're looking at Maricopa. It's got a market index of 47.5. Way too many homes on the market and not very many people shopping. Now down there in Buckeye, you're going to get seller concessions. You're probably going to get a good amount of a price reduction down there. The difference between today's market and the financial crisis that started in 2007 is today people have equity. Back then, they were upside down on their notes, so they weren't contributing closing costs. They had nothing they could give. They were just trying to sell. They lowered the price to a point, and then they looked and said, "Well, I got to give you $60,000 if I sell this house. I'm out. I'm going to walk. And they just walked away from the house because they started with these low down or zero down loans, and that reset. They came in at like 1%, and then the next year it's 7, 2 years later. So they shot themselves in the foot. Not the case today. Yes, we're seeing price reductions because it's slow. We could see these for quite some time. We're waiting for interest rates to come down. I'm kind of on the fence about that. I'm not sure I want rates to come down to froth up the market. I think where we're at today is healthy. Our listing success rate, even though it sits here at 69.4, that's kind of what our average is. It's not bad. Okay. We take a look here at certain markets like the 500 to 600,000 range here, and our months of supply is 3.2. Last month, 3.7. Last year, 3.4. That's a pretty healthy months of supply. It's not too many homes on the market. So in that price range. So we're not, again, seeing any red flags there. This one I like to look at, the Cromford Demand Index and Supply Index. When they start getting close together, then pricing pressure on the downside kind of goes away. When they start growing apart, then pricing pressure starts to increase to lower your price. You could see just barely that supply started to come up a little bit. And then this week it came down a little bit and demand started to creep up. But according to my 7-day moving average, I am not seeing an increase in demand. We are sitting right about where we've been forever and ever. And it's about 2,600 to 2,700 homes. And our active listings are climbing, but they are only climbing seasonally, just like it has every year getting out of summer. So that's not anybody just saying, hey, we're going to list our home. You're going to see an increase in listings in January as everybody gets out there and says, let's go. It's a new year. We made it past the holidays. Let's put our house on the market. We are getting a lot of inquiries of people that want to come in and start looking then in January. Not a bad idea. I don't think prices are going to be nuts. You're going to have a lot of choices. I don't see a lot of changes. There should be an improvement in rates, not astronomical. Everything's off the table now with the government shutdown. I mean, that's just one more thing to worry about, right? What's it going to mean? Are we going to have all these job losses, or is it just going to be done in a week and we'll forget about it? That's usually what happens. But who knows? I mean, our debt is nuts, and that's affecting the bond market quite a bit, and that affects interest rates. So the Fed can come in and lower some things. They're not going to go back to quantitative easing unless they see some real problems. So it's hard to predict. I was asked today, I was doing a podcast with an investment group, and he said, where do you think we're going to be as we get into the holidays? I said, right where we are right now, steady, slow, not a disaster. And he said, we like that. We like when we don't have volatility and we can plan, we can figure out our expenses, and we've got more inventory to look at. He said, we like that. We hope it stays where we are today. Now, if you're selling, you're going, oh, thanks, pal. That doesn't help me at all, but it's not a bad market to sell. It's just a bit of a challenging market to sell. It's about 90 days on the market right now is about average. And that's kind of the way it used to be. So, buckle up. It's, if the other thing we talked about too, I said, one of the challenges that we see in listing a home is that buyers, they know the market front and back. They're looking at every house in the area. They're on all the portals, Zillow, Redfin, Realtor.com. They know your neighborhood. Most sellers know their house and their house only, maybe one or two others. They're concentrating with blinders on. This is my home. I put all this money into it. I remodeled my kitchen. This is what it's worth. The buyer's going, oh, sorry, kitchen. It's okay. The other kitchen over here is better. They're looking at everything. So sellers, you need to put on your buyer hat before you list your home. If you were going to buy a house in your neighborhood, start looking as a buyer, not, oh, my house is better. Just look and say, okay, do I like this floor plan? Do they have a pool? Do I like what they did with the bathrooms and the kitchen? Because sometimes sellers go, well, I put a lot of money into this house. And you look and go, yeah, 10 years ago. But the guy down the street just remodeled his kitchen last month and he's flipping it. So, it's a challenging market. You have to know where you're at if you're going to list, and get with a realtor to help you get the proper comps. Don't do the online ones. They don't mean squat, especially Zillow. They're all over the map. So if you click on that link down below or use this QR code up in the corner, I can send you a zip code report for your neighborhood or a neighborhood that you're interested in. It gives you just about everything that I just showed you in about an 8-page document. It's a pretty good comprehensive read. So if you have any questions, shoot me an email at rick@rickhelps.com. Take care.